of totality. I'm Leah Wald, and I'm here with Tyler Jenks. And today we're going to talk about the fact that Bitcoin is dropping like a rock. So we're going to start with Hyperwaves, and to keep it into perspective of what we're seeing with Bitcoin, but introduce a couple new examples. And then for understanding the Bitcoin markets today, Tyler's going to introduce a new technical tool that we use, which is the Fibonacci extension and the Fibonacci retracement. Sorry about that. So let's start it off. Tyler?
Great, thank you very much, Leah. As everybody knows, Bitcoin began to take another nosedive last night. We've gone to new lows since the peak on December 16th. And we're going to take a look at where it is probably going from here in some detail today. We've been saying ever since the 11,100 line broke, and then the 10,000 line tried to hang on for 2 or 3 days, that we were clearly going lower and probably down to the 7,500 level. We're going to talk about that. But first of all, I'm going to once again give you a brief demonstration of hyperwaves in terms of examples, because we keep saying that Bitcoin and most of the other cryptos are in a hyperwave. And since almost no one knows what that means, I want to reiterate that all hyperwaves are bubbles, but not all bubbles are hyperwaves. That's very important. Not all parabolic moves are hyperwaves, but all parabolic moves are bubbles. And that includes a whole discussion of S-curves, which we will get into at a later date. But for now, I'm going to go to screen share, and we're going to take a look once again at what I call the archetype for the hyperwave. And you should be able to see the chart, and now you should be able to see the hyperwave. This, once again, we've shown this in our last 3 vlogs, is the rendering of a basic hyperwave that I drew 40 years ago and have since cataloged several hundred examples of this. It's in 7 phases, 1 through 7, with the first 4 being up, 5 being down, 6 being up, and 7 being down. The first example I'm going to point to today is the largest hyperwave that I have cataloged. And this is from 1942 all the way till today. This is the 30-year U.S. Treasury bond yield. So it's the opposite of the price of U.S. Treasury bonds. As yields go up, the bond prices are dropping. And as yields go down, the bond prices are going up. This is from the middle of World War II all the way until today. It's the largest amplitude relative to its starting point, which was very close to 1.5%, running up to 14.5%. And then this 4 40-year drop right through today. But going back to the chart, here is what a hyperwave looks like with all 7 of its phases. And here is the 30-year T-bond yield, the hyperwave and the yield. We've been showing you a number of stocks, corporations back from 1924 to 1935, which all exhibit the same movement in terms of hyperwave construction, with a period of flatness followed by increasingly stronger angles of ascent, the drop, the pullback, back towards the top, and then a very long period of decline. With Westinghouse, we're looking at prices going from an area of around 30 up to 300, or a 10x hyperwave. 3 years of downside before going flat again. And very quickly, I'm going to show you how complex some of these can become. This is the gold prices from 1970. 1 year later, in 1971, as we've mentioned before, the gold window was closed by Richard Nixon. What that means is that the Bretton Woods reserve currencies of the US dollar and gold were no longer exchangeable, and gold took this tremendous run from $35 all the way up to almost 900 in the form of the first stage of a very large hyperwave into a very long period of consolidation, gave us a new angle, and has been moving up ever since until just recently. And then the silver price over the same period, in which we had a completed hyperwave that ran from $2 up to almost 40, a 20x rise, before dropping back into the 5th, 6th, and 7th wave that brought it all the way back to the beginning. So we have not yet gone into any details about how you use these hyperwaves in terms of in terms of analytics, because they're really fairly complicated in terms of moving from one phase to the next. And I wanted to make sure that everybody understood all the terminology and has seen 15 or 20 or 30 examples over various time periods before we get into the analytics. You can rest assured that we know the analytics. We've spent 40 years figuring them all out. And the most important reason we're even bringing this up is because this thing that we all love, Bitcoins, this ecosystem that we're all trying to understand, cryptocurrencies, is exhibiting all the signs of one of these hyperwaves. So as a tool for you, and to let you know that it's a tool that we are using in our analysis, and one of the reasons we knew to get out of Bitcoin back in December, right after the peak, was because of this hyperwave analysis. So I think you're going to find it very, very interesting. So now I'm going to go back to screen share, and let's talk about Bitcoin. All right. what we want to do is take a look at this chart, which is on Bitstamp. This is Bitcoin going all the way back on the left-hand side to when it was at $352. And I want you just to mentally compare this with our archetype, Hyperwave. Now, there's something rather frightening about this picture because it seems to indicate that we are in the down phase 5 before moving back up into phase 6 and going into a long period of a phase 7. It is too early to draw that conclusion. It is possible, but I believe that if Bitcoin can hold $6,700 on this down move, that we will simply be establishing another phase change to the upside. And I won't go into the details of that, but I don't want to alarm anyone with our analysis that we believe that this means that this is the end of the move for Bitcoin. It is too early to draw that conclusion, although it is a possibility. Let's get into the details of what happened last night. Now, this is a 30-minute chart. In other words, this is looking back about 6 hours. And obviously, this is the big drop from the 10,000 level. It all occurred in a 30-minute period. And we're working our way slowly lower. The low is 9,000 now, 9,022. That's important because that means we took out the original lows right here, and sometime earlier we took out the first lows from the peak at 19,666. Now, Leah mentioned that we were going to take a look at one of the other tools that we use extensively, that others, of course, use, other technical analysts use, but we haven't talked about it before. It's one of the more important ones, and I'm going to put up a daily chart. These lines are called Fibonacci lines, either retracement lines or, in this case, either extensions or retracements. And I've drawn these from the lows right below the $1,000 mark. Your beginning and ending points are always very important if you're looking at long-term, short-term, or intermediate term. But just briefly, to get a better idea, you can go to Wikipedia or just Google Fibonacci and get a simple understanding of why technicians use this. But the best way of understanding what a powerful tool this is by getting a book that was published in 2003 called Beautiful Pictures, A Gallery of Finance. And finance is spelled P-H-I-N-A-N-C-E. It's by Robert Prechter of Elliott Wave fame, along with A.K. Frost, in their seminal book about Elliott Wave. But the PHI in finance is taken from the PHI in Fibonacci relationships. PHI, phi, is the 21st letter of the Greek alphabet, and it basically stands for a ratio of 1.618. That's about it. unless you're really interested in getting into it. And anybody that is scientifically or mathematically inclined needs to understand what Leonardo Pisano Pagolo came up with. That name Fibonacci is not his name. That was given to him later by someone after he started doing these calculations. The word Fibonacci comes from the words Filius Bonacci, which means the son of Bonacci, his father, obviously. Okay, enough about the background on Fibonacci. Let's just take a look at what it's saying. Here's the peak at 19,666. So from there, these lines that are all some portion of phi, or 1.618, or its inverse. This first line is 23.6%, which means a retracement from the top at 19,666 down to this line at 15,288. The next line down is the 38.2% retracement, which comes in at 12,612. The third line down is the 50% retracement. One of the reasons we struggled for a while between 10,000 and 11,000 was the price was finding support at this Fibonacci line. The next one below us is where we are headed now, because we are very probably closing the day, the week, the 4 hour below that 50% Fibonacci line. Too early to tell on the week, we've got till Sunday. Too early to tell on the day, we've got until later tonight. But right now, we are dropping through that 10,335 Fibonacci line, headed down to approximately this one at somewhere around 8,131, 8,120. I'm going to bring up a little more detailed screen by looking at the 4 hour. All you see on this one are these two Fibonacci lines. This is the 38.2 we just looked at, and this one is the 50%, which we have just sharply broken below. Now, just take a look at this chart of Bitcoin on this 4 hour chart and notice how the price, when it comes down, attempts to hold the Fibonacci line. Here, 1, 2, 3, 4 times, we tried to hold it. We broke through it, came back up, and then it held. And we ran all the way back up to the higher Fibonacci line. Then we dropped back down to the 50% line. And this is key to a lot of people that follow this technique. We were unable on this bounce to get back to the 12,500 line. Now, that is called a non-confirmation in some ways against other tools, but I look at it as the bounce is getting weaker and can't make it back to this major resistance or support line. So then when we dropped down again yesterday and came down to the line at 10,335, and then we closed slightly below it. Just like here, and just like back here, a break, but then immediately rebounded above it. Think of these Fibonacci lines as density of some liquid, in which something that drops down onto it is supported by it, goes underwater briefly, and then pops back up. Gets waterlogged, gets heavier and heavier, can't get back above the next level, drops back down to it. Finds a little support, but not breaking it like it did before. One more time, and finally, so waterlogged it can't hold up and begins to descend. And where does it descend to? It descends to the next Fibonacci line down, or needs to reestablish itself very quickly after making this break. And today's action indicates it's going to really be struggling to do that. Now, we've shown you a lot of other tools. I'm going to take the Fibonacci lines down so I can bring up the tool that we talked about in our last discussion, which is called the stop and reverse line, or the stop and reverse points. This is Wells Wilder Jr. designed this back in the 1970s. And what it tells you is the main direction of a trend. When price is below the descending circles, it will not reverse until those circles can be penetrated to the upside, as happened here. And then they become support until they are penetrated, which happened right here. And then we started down again. This is a one-day chart. This is the weekly chart. And notice, this is very important, that we had not broken the stop and reverse points, except on one occasion right here for 1 week, and one occasion right here for 1 week. Throughout this entire tremendous move from 1,000 all the way up to 20,000, 20x move, and the stop and reverse kept you in except on 2 occasions. Notice on the far right what the last 3 weeks have done. We penetrated on this line this week 3 weeks ago, and so we are now posting 3 consecutive stop and reverse points above the price. And look how high they are because of the amplitude of this move. They're all the way up at 16,700. This downtrend will not reverse until this catches up with the price, and that could be many weeks in the future. On a shorter term time frame, you see, because of the volatility, each of these are calculated on the time frame that you're looking at. You get a lot more ins and outs in terms of the overall trend. And on the very short ones, like the 30-minute, it gives you points at which you can consider if you are a speculator or a trader moving in or out. But notice how far we are below the descending stop and reverse points now because of this huge bar earlier today. Either we're going to have an enormous run back close to 10,000, 9,800 from here, or price will drop away again and we will accelerate. Remember, these are what are called parabolic stops. They're not linear. They accelerate as the price accelerates. Here's a good example right here. It's moving along with the price, and then as price drops, it accelerates down until it forces you out of the trade. So in terms of what we're thinking now on Bitcoin, we've been saying for many days, many weeks, that this downtrend from December the 16th is still intact. This morning, the downtrend is still intact. There are several more steps that it will probably take between the 9,000 level and wherever it bottoms. From a hyperwave point of view, I want to see it bottom before it hits 6,700. At some later date, I will give you the tools on how that is calculated and what it means. That price can be penetrated to the downside, but it can't stay there forever. There's a particular time period that I will allow before I say that the hyperwave is over and we are entering the final stages of it. But we will probably find some resistance at the 8,000 level because of that Fibonacci line. We will probably see some support as we get down between 7,000 and 7,500. And hopefully that will be the resting place. Until then, there is no technical reason to try to catch this falling knife. Now, there are many strategies for trying to put money to work in something that is moving down. And one of the best is simply putting small amounts of money in on a regular basis as the price drops. What happens is your overall cost of your trade continually goes down. If you begin to accelerate the amount of money you're putting in relative to what you had been putting in, as you get closer to these support levels of 8,000, 7,500, 7,000, so that your target amount of money you wanted to put to work has been layered in a dollar cost averaging manner. That is one strategy that a number of people use. If you're attempting to speculate and find the exact bottom, good luck. You might do it. Very few people do. And the problem with that is putting everything to work at one point and then finding out that point wasn't the ultimate bottom. It tends to cause people to panic that don't have a bigger picture of where the price could go and where it has come from. So with all of that, we've covered some more examples of hyperwave. We've shown exactly what hyperwave could mean for Bitcoin. And we introduced you to a tool that many of you already know about called Fibonacci extensions or retracements, but shown you specifically how we're using them as the price of Bitcoin goes lower. And with all of that, back to Leah.
Thank you, everyone. Thanks for watching. Until next time.
Bye-bye.